What does bearish mean in stock market? We are diving into another important term in the stock market, bearish. We are going to uncover its meaning and provide insights on how it influences investment decisions. And I'm going to share different examples of different bear markets. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. Let's dive right in. All right, we are going to uncover the characteristics of bearishness in the stock market, understand its significance, and empower you to make decisions about investments during a bear market. And of course, I'm going to share different examples of bear markets throughout history. And just real quick, the opposite of a bear market is a bull market. The reason we call it a bear market is because when bears are fighting, they put their paw downward. And that is when the market goes down, is during a bear market. And then when a bull is fighting, the horns go upward. So the stock market is going upward during a bull market. So the term bearish describes a market on a downward trend and has a negative or a pessimistic outlook. Investors are usually expecting a decline during a bear market. And being bearish signifies caution and a belief that stock prices will fall. Bearish investors expect economic challenges, poor corporate earnings, unfavorable market trends, or even negative news about a company or an industry or a sector. And there are several factors that can drive this bearishness. It could be geopolitical concerns, it could be economic indicators, market volatility, or just a negative sentiment towards a particular sector. During a bearish time, it can really create pressure to sell investments and lead to a downward spiral of stock prices because investors are trying to protect their investments, so they are selling them so that the price doesn't drop even further and they don't lose even more money. It may not be their entire portfolio, but they may just want to reduce exposure to one type of sector. And of course, when they are doing that, it doesn't mean that their predictions are going to be correct or that they are going to save a lot of their money. Because as we have seen throughout history, markets can be very unpredictable. If we are thinking it's a bear market, it can actually change fairly quickly and level off or even increase. So it's crucial that we aren't relying solely on the bearish sentiment when we are making investment decisions. We should still be doing our own research and deciding if investments are going to be good for us based on our risk tolerance and our time horizon. And it's important that we keep a long-term perspective because these bear markets are going to happen. Stock prices are going to fall. And if we are so worried about that in the short term, then we probably will sell our investments and lock in our losses. And then when it turns into a bull market, when it starts to trend upward, we're going to miss out on those gains because we are not still invested in the stock market. Just to clarify a little bit more, bear markets occur when prices in a market decline by more than 20%, often accompanied by negative investor sentiment. Bear markets can be cyclical or they can be long-term. So it could be several weeks or a few months, or it could be for that long term, it could be for a year or longer. And let me share a few examples of bear markets throughout history. So maybe you heard of the housing crisis back in 2009. So the ballooning housing mortgage default crisis caught up with the stock market in October 2007. Back then, the S&P had touched a high of 1,565.15 on October 9th, 2007. And then by March 2009, it had crashed to 682.55. And the US major stock market indexes were again close to a bear market territory on December 24th, 2018, falling shy just of a 20% drawdown. And then most recently, the Dow Jones Industrial Average went into a bear market on March 11th, 2020. The S&P entered a bear market on March 12th, 2020. This followed the longest bull market on record for the index, which started in March 2009. And stocks were driven down by the pandemic, which brought with it mass lockdowns and the fear of depressed consumer demand. So during this period, the Dow Jones fell sharply from all-time highs close to 30,000 to lows below 19,000 in just a matter of weeks. And then from February 19th to March 23rd, the S&P 500 declined 34%. And then just another quick example, it also happened in the aftermath of the bursting of the dot-com bubble in March 2000, which wiped out approximately 49% of the S&P 500's value and lasted until October 2002. And then also the Great Depression, which began with the stock market collapse of October 28th through the 29th in 1929. As you can see, there are quite a few different examples of bear markets throughout history. And all that we really need to do is to remember to have that long-term perspective, because we know the market is going to go up and down in the short term, but the long-term trend is always upward. So if we have that long-term perspective, it won't be quite as bad of a ride because we aren't expecting short-term wins. And then we also want to diversify our investments, our portfolio. We don't want to just invest in one single company, because if that company goes out of business and we are losing all of our money, we want to make sure that we have different investments inside of our stock market accounts. One way I like to diversify is to invest in an index fund. If you want to know which one, I have another video I created. I'll leave a link above. You can check it out later on. So while a lot of people will become scared during bear markets and sell their investments and completely stop investing, we can realize that we are focused on the long term and we can take advantage of a bear market and put more of our money into the bear market, realizing that we can capitalize on gains when it switches over to a bull market and starts to rise. And of course, we don't want to invest money we are going to need right away. And if you do want help investing your money very simply in the stock market, I have a free masterclass where I go over how I can help you invest in the stock market. I'll leave a link to it below in the description. You can click on the link and check out the free masterclass. And if you want more information about a bull market, I have another video for you. I will leave a link above. You can check it out later on. Comment below and tell me your experience with bear markets. I'm curious to know. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. And if you want to see even more content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.